After an abysmal start to 2025 for the Toronto real estate market, February, the month of love, the month of family, and of course, let's not forget my birthday month, has totally redeemed the city of Toronto. What happened, you might ask? How could Toronto go from a condo market apocalypse to now taking off like Maverick and Goose, or Rooster for all you millennials out there, in only a matter of 30 days? Spoiler alert, the central Toronto condo market has regained its footing. Detached homes have added almost $500,000 to their average sale price, and competition in the townhouse segment has gone 10x. What does all this mean? Stick with me while I break it all down for you. And as I reach for this monthly market report, take a quick second to hit the subscribe button down below so you don't miss out on everything you need to know each and every week. During the month of February 2025, the total number of homes sold in the city of Toronto was 1,540. This was down 22% year over year, but it was up 11% month over month. January was an atrocious start to this year, but all throughout this report, we see quite dramatic month over month improvements. There were 775 homes sold in central Toronto, which makes up about half of the total homes sold across the entire city of Toronto, despite representing only 40% of the total TREB zones. Year over year, central Toronto was down 14%, but posted a massive 20% month over month growth. This is significant after a very slow January. The days on market in central Toronto dropped by 14 days to 49 from 63. That means 2 full weeks were chopped off the lifespan of a listing. Buyers are moving faster with their decisions, and properties are not sitting as long as they were last month. You can feel the pace again in the market. These are all clear indications that the market has finally emerged from its winter hibernation and is on an upward trajectory as we approach the hottest time of the year to sell real estate in the city of Toronto. Looking now toward average price, the city of Toronto rang in at $1,087,770, which is up 1.5% year over year and up 10% month over month. Central Toronto reached $1,155,470, which was an annual increase of 2.5% and month over month increase of 11%. In dollar value, you'd be looking at just over $100,000 from only 30 days ago. Central Toronto typically leads the way, retaining its property values and competition when the rest of the market starts to weaken. With top-rated schools, world-class retail, business centers, and convergence of our transit lines, it's location, location, location. Here's how each market segment priced out in the month of February. Detached homes hit a whopping 2,836,983. This was up 15% year over year and 19% month over month. Just over $450,000 to the average price in just 30 days. Semi-detached, 1,493,605. This was down 6% year over year, but grew 8% month over month, which was just over $100,000. Townhomes were $1,432,333. This was down 4% year over year and up 3% month over month. But the number of townhomes sold jumped by 31% month over month. Another interesting detail that might not hit your radar is that the sale price to list price was 102%. That means the average listing sold 2% over asking. This was the highest value across all segments, and coupled with the massive sales spike, all fingers point to what I touched on last month about the increase to the threshold of the down payment for insured mortgages. Now, for the troublesome condo market. Average price was a healthy $773,514. Only a slight decrease year over year of 0.86%, less than 1%, but an increase of 4.5% month over month, just over $30,000, and the highest recorded price since October 2024. Let's look at what we're seeing in the market today. Central Toronto is sitting on 4,668 properties actively listed for sale. This is an increase of 51% year over year, an addition of about 500 properties more for sale than there was last year. However, we did see a smaller increase in active listings added to the market compared to last month, so we are currently trending downward. The breakdown right now of active inventory is 21% being freehold and 79% being condominium. Remember that in January, freehold was at 19% and condominium was at 81%. There were 763 detached homes, 119 semi-detached homes, 69 townhomes, and 3,715 condominiums. The condo market has decreased to 6.25 months of inventory compared to 6.7 months of inventory on the market last month. So that is a step in the right direction. This is what February had to report, but what am I seeing in the market right now? What will the Toronto real estate market do as we move forward? I can say there's been an uptick in not just buyer activity, but also seller activity. My phone is ringing more and more with buyers looking to book showings and sellers looking to have valuations done on their properties as we enter the spring market. Home sales and average price are both up double digits over the past 30 days. Days on market have been cut down by a full 2 weeks. Market activity is back without question. The Bank of Canada has just lowered its overnight rate yet again, which will certainly spur on more activity in the coming weeks. A few weeks ago, BMO came out saying that they see the overnight rate getting down to 2% by July because the Bank of Canada will need to make emergency cuts in response to the US tariffs. These tariffs have again been paused as Canada and the US continue to negotiate on this trade war. So how much will it really affect the real estate market? What I do see is a very healthy and very active spring market ahead for Toronto. So if you're on the fence and need a little bit more information, click the link below in the video description and book a call with me at your convenience.